Brookfield is the largest stock in my portfolio, and I have been continuing to add to this position for nearly 2 years now. The company also just reported its earnings, and the stock is going up slightly after it reported. Now, I went through the earnings, the transcript, and the shareholder letter to find everything I think investors need to know. And in this video, I want to share what I found with you. I will also be sharing what I am doing with my position now that Brookfield has reported. However, before we get into the video, I want to let you all know that Stock Unlock is currently having a 25% off sale. Stock Unlock is the stock analysis and portfolio tracking platform that I use here on my channel, and it's truly the most value-packed platform out there. So if you have been waiting to subscribe to Stock Unlock, or you have been meaning to check it out, then there's no better time to do so than now. You can get 25% off a yearly subscription or 25% off a monthly subscription for the next 6 months. This means you can now get an annual subscription to Stock Unlock for less than $6 per month, or our highest tiered plan for $15 per month. Do not wait though, as this deal is only on for the next couple of days. So if you're interested in checking out Stock Unlock and saving on your subscription, then click the link in my description. Alright, and with that being said, let's now hop into the video. And right away, I want to show you all how Brookfield's distributable earnings have been growing over the years. Now, for those of you who may not know, distributable earnings is basically Brookfield's own calculation of earnings or cash flow. And what I like to do is outline the company's actual operating distributable earnings in these red boxes, because it makes it easier to see how the company's operations and the profits of its operations have been growing. And we can see here that in the trailing 12 months, Brookfield's distributable earnings have hit an all-time high, even on a per share basis. On a per share basis, they are now sitting at $2.77 in the trailing 12 months. So the overall business's profitability is continuing to grow, and this is a good thing to see. Now, moving on to the next screenshot, this says distributable earnings before realizations were $1.1 billion for the quarter and $4.4 billion for the last 12 months, an increase of 11% on a per share basis over the prior year. We can also see that the asset management business generated $636 million in earnings relative to $104 million last year. So the asset management business saw about 5% year-over-year growth. However, the wealth solutions business, which is the insurance business, saw earnings of nearly $300 million, which is growth of 80% year-over-year. On an annualized basis, this business is also doing $1.43 billion in earnings now. So this insurance business has grown massively, and it is producing a significant amount of cash flow now for Brookfield. The operating businesses saw earnings of $371 million, and on an annualized basis, they are now producing roughly $1.6 billion of earnings. Distributable earnings before realizations are now at that $1.1 billion, and on an annualized basis, they are doing about $4.7 billion in distributable earnings. Then we can see that Brookfield had a $963 million gain on an asset sale. So the total earnings for this quarter were sitting at $2.1 billion, which is up quite significantly year over year. And in the trailing 12 months, the company has now done a total of $5.8 billion of earnings when we include asset sales. So once again, overall, the company is continuing to grow, and we can see that a lot of this growth is coming from the insurance business, which is what Brookfield said and projected would happen. Now, this next screenshot is the infamous table of all of Brookfield's different assets. And there's a lot of numbers on this screenshot, so we're going to go through them very quickly, and I'm going to try and break this down for everyone. So this table basically summarizes Brookfield's estimated value of all of its different assets. And we can see here that they estimate that their asset management business is worth about $89.4 billion now. The insurance business is also now worth an estimated $21.4 billion, and the operating businesses are now worth about $42 billion. When we add up all of these assets, we get a total asset value of $152.7 billion. However, Brookfield Corporation does have roughly $19 billion of debt, so its net asset value is estimated to be around $133.4 billion, and on a per share basis, that is $83.53 US. So Brookfield estimates that its true net asset value is around $83.53 US, and I believe that the stock is trading for roughly $44 US today, which leads Brookfield to believe that its shares are still significantly undervalued. Now, if we take a look at the overall operating cash flow that these businesses produce on an annualized basis, it is about $5.5 billion. However, this does not factor in the corporate costs that we see right here in the previous screenshot. So when we factor in the actual operating costs of the business, the annualized free cash flow or earnings is about $4.7 billion today. Now, this next screenshot just shows us the growth of Brookfield's overall business and its annualized cash flow. So once again, we can see here that the annualized cash flow of all the operations is about 5.5 billion now in the trailing 12 months, and in 2023 it was 4.5 billion. So year to date, Brookfield's annualized cash flow has already grown 22% over 2023, and the business is seeing very strong growth. Now, the next thing that I want to cover is Brookfield's letter to shareholders, because there was a lot of gold in this letter, and there's a lot of tips for investors as well. These are always just great to summarize, so I want to point out some of the highlights from the shareholder letter. Right away, this says, our financial results in the second quarter were strong. Each of our businesses continued to execute on their strategic plans and delivered growth in cash earnings. During the quarter, we agreed to acquire a majority stake in Noeon, a leading global renewables platform located in Europe and Australia. So Brookfield is continuing to deploy capital and acquire other leading renewable platforms, and this is continuing to push Brookfield to be one of the leaders globally in renewable energy and power. Then Bruce writes, although equity markets have been more volatile in recent weeks, risk appetite in the capital markets remains strong, positioning us well to execute on the robust pipeline of growth opportunities, monetize mature assets, and deliver strong returns. So now that the markets have recovered and overall investors are seeing a risk appetite, Brookfield is taking advantage of this and monetizing assets, which basically means that they are selling off some of their assets that are mature assets and realizing the returns of these assets, which is also why Brookfield had $963 million of asset sales in this quarter, which added to the company's overall earnings. So throughout the remainder of 2024, we may see more asset sales, which is going to boost Brookfield's overall earnings in the second half of the year. Now moving on, Brookfield talks about their asset management business, and they say, fee-bearing capital at the quarter end was $514 billion, an increase of 17% over the last 12 months. As a result, annualized fee-related earnings grew by 11% compared to the prior year quarter. So in the asset management business, the annualized earnings are up 11% year over year. However, this is still below Brookfield Asset Management's growth guidance of 15% plus annual earnings growth. And I do think that this is partly why the BAM ticker did sell off after BAM reported its earnings, because again, the company is still not meeting its own guidance. However, the company is projecting to see increased growth in the second half of 2024, and they did also say this in the first quarter. So the asset management business is projecting to see even more growth in the second half of 2024. Very quickly, I want to share a screenshot from Brookfield Asset Management's conference call and the transcript. And here they say, our focus remains on how we continue to generate value for our clients, and we believe that should lead us to bringing in another $1 trillion of assets under management over the next 4 years. Now, for those of you who may not know, Brookfield Asset Management announced that they now have $1 trillion of assets under management in their most recent quarter. So the company is basically expecting to double its AUM over the next 4 years, which is a 20% compounded annual growth rate to the AUM. This should also lead to significant earnings growth for Brookfield Asset Management and overall earnings growth for Brookfield Corporation as well. All right, moving on to the next screenshot. This one talks about the wealth solutions and insurance business. And this says, as we reposition the AEL investment portfolio, we expect the investment spread to increase back closer to 2%. And as a result, annualized earnings should grow from $1.4 billion currently to $2 billion. Now, for those of you who may not know, Brookfield acquired AEL, which was a massive insurance company, and now that they have acquired AEL, its investment portfolio is mostly in short-term liquid assets that do not have a very high yield on the investment. And now what Brookfield is doing is slowly repositioning this investment portfolio into higher yield investments. And as it does so, they are projecting that their current investment portfolio or the current insurance business can grow its annualized earnings from the $1.4 billion to $2 billion just by repositioning the investment portfolio. I believe they said over the next 18 months. Then Brookfield also says, through our combined wealth solutions platform, we are raising close to $2 billion of retail capital per month. So Brookfield is raising about $15 to $16 billion of capital through its insurance business now, which is how the company is also gaining capital to continue investing. This is basically how Berkshire Hathaway has been able to scale up its investments as well, is they take in insurance capital through an insurance float, and then they can invest that capital at higher returns. And Brookfield now is raising about $15 billion a year in capital through its insurance business that it can then deploy into higher yield investments as well. And this is why the company really pursued growing its insurance business. All right, now let's move back over to the shareholder letter, and it says, what has made us successful over the last many decades will continue to drive our success for decades to come. Our investment philosophy has been and continues to be built on the following key principles. Acquire high quality assets and businesses. Invest on a value basis with the goal of growing cash flows and compounding capital. Enhance the value of investments through operating expertise, and build sustainable cash flow to provide certainty, reduce risk, and lower our cost of capital. For over 100 years, we have applied these principles while investing our own capital, with assets currently exceeding $110 billion and heading towards $250 billion. So for those of you who may not know, Brookfield has been in business for over 100 years. And these are the principles right here that has allowed the business to continue compounding itself at around 20% annually. And they say that they are set up to continue compounding the business at around 15 to 20% annually going forward. And it sounds like the business is now wanting to head towards $250 billion of assets, which is a good thing to see, especially as a shareholder. Now, this next screenshot from the shareholder letter talks about share repurchases. And if you have read my book, The Fundamentals of Investing and How I Believe Investors Should Think About Share Repurchases, then you will see how the CEO of Brookfield, who is Bruce Flatt, really resonates and shares my opinions on share buybacks. And I think that this is a great lesson for all investors. So this says, and where a business is undervalued, to repurchase shares. We repurchased over $800 million worth of shares of the corporation in the open market. We acquired these shares at an average price of $40 per share. The value of our businesses based on our estimates is currently $84 per share, as we saw earlier. The act of repurchasing shares is often misunderstood by investors and even some management teams. It is not, as some think, a method to boost the share price. In fact, one should hope to make these purchases at a lower price, as repurchases made at lower prices incrementally and very meaningfully add value to the remaining shares outstanding. So Bruce is saying here that management teams should not announce massive share buybacks to boost the share price. In fact, management teams should want to buy back shares more when the share price is down because it creates more shareholder value, as I write in my book. And Bruce is saying the exact same thing here. Then he continues on to write, share repurchases at too high a price can equally destroy enormous value in a business. This is why ensuring management is aware of the value of their company and completing share repurchases for the right reason is extremely important. And again, this is exactly what I write in my own book. And Warren Buffett has even said that share repurchases at high prices above intrinsic value actually destroy shareholder value because it's essentially a waste of cash. And what Bruce is saying here in Brookfield's letter to shareholders is that it is important for management teams to know the value of their business, pay attention to the value of their business, and only buy back shares when their share price is below the intrinsic value of the business. And in my own investing, I love to see management teams that know the value of their business and only buy back shares when the business is undervalued, which is not normal in the stock market today. Typically, we see businesses buying back shares when the stock price is at all-time highs and the business is actually overvalued. Like Nvidia, for example, they announced a $25 billion stock buyback when the stock, in my opinion, is overvalued. Same with Apple. Apple announced, I believe, a $110 billion stock buyback when the stock is, in my opinion, significantly overvalued, which could also be a reason why Warren Buffett is selling off his Apple stock, because the management team over there, in my opinion, is not actually effectively deploying capital anymore. And overall, what I'm trying to explain here is that the CEO of Brookfield, in my opinion, is creating shareholder value and is focused on creating shareholder value by only buying back shares when he believes the business and the stock is undervalued as well. All right, now this next segment of the shareholder letter, I think is the most bullish thing that I have ever read for Brookfield Corporation. And this is really solidifying my long-term conviction on the business and also helps explain why this is the largest stock in my own portfolio. So I'm actually going to read this entire segment right here because I think that it is very important for all Brookfield shareholders to know about. So this says, the AI revolution is increasingly a renewable power story. The foundation for the revolution going on with increasing computing capacity and AI comes down to four things: renewable power, data centers, design and fabrication of chips, and computing capacity. Each of these forms part of the backbone of this AI revolution, and we are fortunate to be at the center of most of these. Combined, we have by far the largest development pipeline of anyone globally. The next 20 years will be an unprecedented period for electricity build-out. The electrification of industrial capacity, automobiles, heating for houses, and other uses is driving unprecedented growth in the demand for electricity. On top of that, the world is adding data centers for AI and cloud computing at a stunning pace. To put this in perspective, the global installed capacity for electricity is approximately 8,000 gigawatts. To meet expected demand, this installed capacity will need to expand to more than 20,000 gigawatts in the next 20 years. In addition, nearly half of what exists today will need to be retired, as it is very carbon intensive. Said differently, we need to more than double the current capacity, which was largely built over the past 50 years, while also replacing approximately 50% of what we have. Nothing like this has ever been attempted, but it is essential in order to reach the world's net zero goals and drive the AI revolution. The increase in demand for power to run data centers used in computing capacity for AI is only starting to be understood and is largely excluded in the above calculations. The computing capacity required for algorithms to advance medical discovery and industrial productivity is large. The amount needed to power computing capacity to train robotics towards intelligence nearer to humans is vast. But when we reach that goal, productivity advances in many businesses will be very significant. As the largest builder of renewables and data centers in the world, with over 230 gigawatts of projects owned or in various stages of development, this is very exciting for us. But given the above demands, our scale must increase dramatically to meet the needs of our customers. In this regard, we have acquired more than 10 renewable operating and development platforms and 3 data center businesses over the past few years to scale up our capabilities. There are several factors, however, that must evolve at the same time to grow even larger. We need better regulatory permitting. Chips and servers must be designed to consume less power, greater amounts of transmission infrastructure must be built, further advances in battery storage of most power must be made, and more capital from our global clients to drive these investments must be invested. Our recent agreement with Microsoft was a landmark deal in corporate power contracting. At over 10.5 gigawatts, it is nearly 8 times larger than any other deal ever signed. But for perspective, this is just 10.5 of the more than 16,000 gigawatts required in the next 20 years. This is a $10 billion plus deal, which indicates the scale of the total capital required to meet power demand and decarbonize hundreds of trillions. Ultimately, we believe the above will not be accomplished without nuclear capacity coming back in a major way, as it is the only baseload carbon-free power at scale that exists with current proven technologies. And while it is possible there could be a scale breakthrough in fusion or something else, we do not believe it can be commercialized within the next 15 years. We are therefore highly focused on advancing micro and small-sized nuclear batteries, 5 megawatts to 300 megawatts, through our Westinghouse business for delivery later this decade. And the success of this effort may solve the final push to carbon-free power into the second leg of the global net zero plan. Our micro and small-sized units are the most advanced of any, and with our small-sized units based on the same technology as our AP1000 large plant technology, which is safely in operation globally. As a result, we have an enormous head start and are working hard to achieve commercialization of these units. This will be a real game changer when we get there. So there is a lot to unpack here in this overall letter that Bruce wrote. And I don't really know how anyone could read this and not be incredibly optimistic on the future of Brookfield's business. They are basically the company that is powering, like actually powering, the AI revolution. And they are one of the only companies in the world that is able to build out all of the electricity that the world needs over the coming decades at scale. And that is why Microsoft chose Brookfield in that $10 billion deal to provide Microsoft with clean energy. Also, I think that it is incredibly important that Brookfield is investing in nuclear energy. Because I actually made a video on my channel about 2 years ago, entirely dedicated to why I think that nuclear energy is a must need for the world to actually efficiently power the world going forward and meet all of the net zero goals that the world is setting out for. Without nuclear energy, we're simply not going to meet our net zero goals anytime soon. So I think that the world needs to heavily invest in nuclear energy going forward. And I think that the world is not really pricing this in to any nuclear energy stock today. And that ultimately creates a massive opportunity in the nuclear energy industry. And Brookfield is set up to capitalize on the future investments needed in nuclear energy. and they made that investment in Westinghouse back in 2018. And I like this for a multiple number of reasons, but the main reason is because Brookfield is truly a business that is not only focused on what the world needs today, but they are investing in what the world will need over the next 50 years. And they plant the seeds today to benefit from them over the coming decades. And I really like that Brookfield is finally talking about nuclear energy more, because as I said, I strongly believe that the world is going to need a lot more nuclear energy in the future. And I will also put a link to my nuclear energy video down in the description if you want to check it out. I did make it private on my channel because when I released it, it was like such a one-off video that was not really related to investing at all. So the video did absolutely poorly on my channel. So I took it down and I made it private, but it is still on my channel behind the scenes. So I will put a link in the description if you guys want to go and watch my 20-minute long nuclear energy research and why I think that the world is really sleeping on nuclear energy. So now let's head back over to Stock Unlock and talk about Brookfield's price today. So in the market, this is now a $73 billion company, okay? And as we saw, the company did about $4.7 billion in true distributable earnings or cash flow over the past year. This means that Brookfield is now selling for about 15.5 times cash flows, and this business is projecting to grow its free cash flows by 20 to 25% annually over the next 5 years. So when I take a look at Brookfield, I see a business that is trading for 15.5 times cash flows with 20 to 25% annual projected growth to cash flows. And ultimately, that leads me to believe that this business is still cheap in the stock market today. And that is why I have continued to build my position, and I have added to my Brookfield position after they reported earnings just yesterday. So this is the largest position in my portfolio, and I am continuing to add more as my conviction grows and as this business grows as well. Now, while we're here, we should also talk about Brookfield Asset Management because they did report their earnings a couple of days ago, and I want to update you all with my thoughts on Brookfield Asset Management's price today. So this is a $17.6 billion company in the stock market today. However, Brookfield Asset Management has a net cash position of $2.4 billion. So I am going to subtract that from the market cap. And we can see that Brookfield Asset Management has a market cap now of about $15.2 billion in the stock market today. Now, the company is doing about $600 million in annualized earnings today. I know that we didn't cover that in this video, but that is what the company is doing today, which means that it is trading for an enterprise value to earnings of about 25 today. Now, this is, in my opinion, on the higher end of the range that I would like to be buying Brookfield Asset Management for. However, I did nibble on some more shares after the company reported its earnings because the stock did fall quite a bit. And overall, I think that over the long term, this is still an attractive price to pay for Brookfield Asset Management. But in general, I do think that this is the higher end of what I would be willing to pay for the business. And I don't think that the stock is like an absolute steal today. And I think that it is probably selling around fair value, if not slightly above fair value today. And in my opinion, I do think that BN or Brookfield Corporation is actually the cheaper stock in the market today. But I do think that Brookfield Asset Management is still a phenomenal business with a lot of future projected growth. And I do think that it is still selling for a very fair price. To put this in perspective, the company is offering a dividend yield of about 3.9% today, and it is projecting to grow that dividend by 15 to 20% annually over the next 5 years. And I have not seen this high of a dividend yield in the stock market before, while also projecting this level of dividend growth. And for that reason, I do think that Brookfield Asset Management is the best dividend growth stock in the entire stock market, which I have said on my channel for the past about 18 months now. And for that reason, Brookfield Asset Management is the second largest position in my personal portfolios as well. So with all that being said, that is going to wrap up my video for Brookfield Asset Management and Brookfield Corporation. And that is my updated summary of what I think about the price of these businesses today and Brookfield Corporation's earnings. If you guys did enjoy this video or you found it helpful, then please remember to leave a like on it. And I do hope that you subscribe to the channel if you are new here and you want to stick around and see more stock market related content like this. Lastly, I just want to remind you all that Stock Unlock is having that 25% off sale, and we do not have sales very often. So if you are interested in checking out the platform and saving 25% on your subscription, then I would strongly recommend going and taking advantage of that deal, because there's not going to be another deal like this for quite some time. But with all that being said, thank you all so much for tuning in today and checking out my video. As always, I truly do appreciate it, and I really hope to see you all again in my next video.